Kamlesh, hi, good morning. Good to have you on the show. You've entered into this co-lending partnership with Bank of India for MSME loans. What are the growth prospects and how do you actually see this tie-up actually evolving in times to come?
So good morning. So this tie-up is in the lines of the scheme announced by RBI one and a half year back to promote financial inclusion and consistent and a continuous credit flow to the MSME sector. So our tie-up with Bank of India is to serve the MSME class, which we have been serving since more than 2.5 decades. And with our distribution strength and with the balance sheet strength of Bank of India, I think we'll be in a position to expand our reach and expand our book going forward.
Okay. Also wanted to understand how the recovery has been post the second wave, and are you seeing recovery in terms of cash flows of customers, what the on-ground situation is currently, and of course visibility going forward?
Definitely. So if we take our case, I think our recovery is almost back to normal, so to say, and also on the loan demand side. So from August onwards, we are also seeing healthy demand of loans from the customers whom we serve. That is predominantly the MSME borrowers. So it is fair to presume that their activities are coming back to normal, and hence they are also started filling the requirement of the funds, and that is where the demand is coming to us from them. So the recovery has almost reached the pre-COVID levels, and also the demand also picking up. I think we have reasons to believe that their activities are coming back to normal fast.
Okay, that's good to hear. Hi, Mr. Gandhi. Good morning. This is Mubina as well joining in. It's not just Bank of India, but you've also entered into a partnership with CredAvenue. Cred, as we know, of course, is a digital-focused, high-flying fintech company. So I'm going to club two questions together. One, to ask you about the rationale behind Cred, and two, considering that Cred in itself has sort of already an established dominance in the digital lending fintech space, is this in a way your strategy to also enhance your own digital capabilities and your offerings to customers?
Yes. So tying up with CredAvenue is giving facility to our smaller partner NBFCs whom we work with and to whom we extend finance from time to time, and where they write in our books directly basis our credit screen. So tying up with CredAvenue will give us a real-time data access, and at the same time it will give us a better monitoring, and that platform will be used to expand our digital reach to the borrowers whom we want to reach through our NBFC partners. So this is a step in the direction of going digital, whereby we believe that digital should serve the purpose of strengthening our distribution strength without compromising with our underwriting practice. And at the same time, it should result into not only customer services, but customer delight. So with this aim in mind, we have partnered with CredAvenue, and we are in the initial stage of exploring various possibilities as to how we can attain this objective.
All right. Okay. We spoke upon the growth and the recovery aspect, and glad to hear that you're almost back to those pre-COVID levels. But the biggest segment that you cater to is the MSMEs and the SMEs. The pain has been visible there. That's what we understand from a lot of the on-ground experts we speak with. Is this something that's putting pressure on your asset quality? If you could share that with us.
See, as we all know that this has been an unprecedented times, and MSME has been the most vulnerable class. So they were affected, but they are coming back to normal fast. So there will be various types of borrowers, ones who have come back to normal, ones who are doing better than what they were doing before. And there are certain class of borrowers who are really suffering because of the pandemic. And that is evident from the DPD migrations, that is days past due migration on our books also, whereby we usually used to keep gross NPS below 1.5% to 2%, had increased to around to 2.5%, reflects that there are certain class of the borrowers who are under stress, and they will still take few quarters to come out of this. But however, having said that, the positive sign is that majority of the recovery is coming back to normal, and there is also a robust demand coming from the same borrowers. And hence, we are confident that going forward, the borrowers who are lagging behind in the repayment will cope up within a quarter or two.
Kamlesh, Alex joining in, and I'm just taking forward what you just said in terms of a few borrowers, or rather, there are SMEs that are under pressure right now, but you're seeing trends normalize. Having said that, a couple of things that I want to understand. A few NBFCs, a few banks have said that they're going to be cautious in their approach to lending in the current scenario. At the same time, you're focusing on these digital initiatives that will help you reach a lot more borrowers. So how are you approaching overall the lending platform? What is your outlook on how advances are going to grow in the remainder of this financial year?
See, whenever we talk about loan demand and credit delivery, the team has been extending credit where it is due. So as I shared with you that a fintech platform for us should serve us the objective of not compromising with our underwriting practices. On the contrary, it should strengthen our underwriting practices. So the team of extending credit where it is due will be at the center stage whenever we talk about disbursements. And going forward, this will not be compromised. And once the real economy starts picking up, the disbursement will also start picking up. But as you rightly marked, that has to be done very cautiously. And as far as we are concerned, we have been doing the same since more than 2 decades, that extending credit where it is due, reflected from the asset quality, what we have maintained even during the stress period. So the priority will be quality and then the AUM growth.
Okay, Kamlesh, a number would help in terms of what percentage of advances growth you're looking at. But I'm going to ask the next question as well, which is a lot of lenders have gone ahead and raised capital as a buffer in these troubled times or in these challenging times. What is your outlook in terms of capital? Do you need to raise at this point? Are you comfortable right now?
So answering your second question first, in terms of capital adequacy, if you can say it says in June, we were having a very healthy Tier 1 capital adequacy of 25% plus. And over the years, we have grown in consistence with our internal accruals, and which gives us the room to grow anywhere between 20 to 25%. So looking at the capital adequacy, what we have currently, in near future, I don't think that we'll have to raise capital to fuel our growth at the rate of 20-25%, which we have been doing since long. And coming back to your first question, in terms of number, we expect anywhere between 10 to 15% growth this year, given the fact that Q1 was almost non-functional. So we have to cope up those numbers in next 3 quarters. So given the opportunity, as I shared, that in consistency with our policy of extending credit where it is due, we can see a growth anywhere between around, say, 15%.
All right. Glad to have you with us, Kamlesh. Thank you so much for taking the time and wish you all the best for the rest of the financial year.